Hello everyone, good morning. Today is July 7th. I'm going to be doing today's resume with you and basically going through my with my resume of the day process, let's call it that, which is what I used to call the Notion process, but I'm no longer using Notion, so I don't know, I don't want to say Notion process because it's not Notion basically. So what I do is I show day's price action. As you can see here, this is the price action, which is what I currently have on the charts. Then I explain what happened through midnight in London. Then the session screenshot, explaining phase 1, phase 2, the trades that occurred, and then the conclusion, right? So we had a pretty various session, or day completely, which is kind of what we were having through the entire week. So it is somewhat what I was expecting. And yeah, I managed to catch 2 trades, which I can show with this. With backtesting. Hold on. Not backtesting, but replay. First sell was here on the 5-minute thing, the 5-minute fair value gap. Closed some partials here, closed some other partials here, then break even here. Another sell here on the 5-minute fair value gap. Continuation lower. Some partials, aggression higher. Aggression lower again, some partials here, and then final close was on previous day's low. And yeah, that's pretty much the 2 trades that I took and how they were managed. And I wanted to do the resume again, as I said, with you. And yeah, so what I said about midnight was that through midnight, price basically opened, swept buy side liquidity by sweeping this highs. We don't really have much to the left, although I do think it might have reacted to this tiny bit of an order block here. Yeah, not really something that I will pay attention that much. All that I really need to see is the buy side liquidity being swept. And then we see immediate aggression lower, tiny bit of a retracement, aggression lower, retracement, aggression lower, right? Through pre-New York, which is this, between London kill zone and New York kill zone, price aggressively went higher, sweeping highs. All of this one, and this one, but still respected that high that swept the buy side liquidity through midnight because it wasn't London kill zone yet. And right after that, we can see the aggression that generates fair value gaps that price trades into, and then aggressively continues lower, right? So yeah, now the next thing that I would have to do is analyze the session specifically and take a screenshot of it. And what I like doing is, let me actually open this like that. What I like doing is seeing what happened through phase 1, which will be this price action, and phase 2 will be from session opening up to 9:30, which is here. And then phase 3 will be the rest of the session, which is just trying to follow the direction set by phase 1 and 2. And today what happened is that we had a fair value gap, probably even in the 15-minute here. Let me actually check. Yeah, so we have the 15-minute fair value gap here, which I'm actually going to draw so we know where it is. That phase 1 traded into here. And that was one of the reasons to believe it was going to be bearish. The other reasons is that, well, we swap liquidity, then we see aggression lower, fair value gaps to the downside. It's many things that basically came into play. So trying to get a way to have the entire session approximately. Okay, that should be fine. So gotta say this high took liquidity from the left, random buy side liquidity. Let's put it top and left and give it a couple of spaces. Okay, so run buy side liquidity, aggression lower generates 50-minute fair value gap, which price traded into here through phase 1. Then we see aggression lower, aggression lower. Session opens here inside a 5-minute, a phase 1 fair value gap basically. Actually do it on here. So thing is, the session opens here, trades a bit higher, still within that fair value gap in the 5 minute from phase one, then aggressively lower, generates a fair value gap, and that's what I traded into. That worked out well. Then it didn't. Basically, I ended up with a break even here. Took maybe a 1.5 maybe percent in profits on this sell from this point down to this point, which is where it took some partials, then retraced completely against me, swap liquidity. And the reason why we could have sold from here as I did is because we see aggressively price going higher, sweeps a high, and then we see the exact aggression creating fair value gaps to the downside. So the fair value gaps, the moments where we can take advantage of those is when you see them happening after a run on buy side liquidity or a run on sell side liquidity happened, right? Or another fair value gap was mitigated, as it would have been in this case, right? So that's the reason why I sold from here. And yeah, that's pretty much it. So session opens inside of phase one fair value gap, shows immediate aggression lower, continuing with the expected trend, and creating 5 minute FPGs to trade. All right. I didn't want to move that. Can put it like this, can't we? Yeah. Okay, then we have this. What did I want to say about this one? So I want to put it in this high. If I'm correct, not correct, I can do that, yeah. On BSL, 5 minute FVG. I've been lately trading mostly with 5 minute fair value gaps only, because as an example in this trade, if we go to lower time frames, I don't think this was the case, but in some cases we have a 5 minute fair value gap, which generates an entry on the 1 minute, but that entry in the 1 minute might fail while the 5 minute is still holding. So as an example, if we took an entry in the 1 minute in here, and we placed our stop loss above the high, then we would have been fine. But if we enter a trade on the 1 minute fair value gap, but the stop loss above that 1 minute fair value gap, it has a possibility that the 1 minute time frame is just going to go above that high, sweeping the liquidity on it, and then aggressively going lower. And in some cases, even though we could expect for a a run on buy side liquidity, a market shift on the 1 minute with fair value gaps, and then trade into that, still I've seen it fail a couple of times. And I don't really think we had an example today, but I do think we had an example yesterday. I'm not going to get into that, but it's something that I've seen. So today as an example, and yesterday as well, I actually trade just with 5 minute fair value gaps, and they seem to be working quite well, so I'm quite happy about that. And target would have been this, previous day low. I was hesitant to look for sells today due to my belief that Thursday usually tends to go against the trend or against what the entire week has been doing. And it has been the case on the past probably 2-3 weeks, but in this case, in today, at least it wasn't. It didn't really move that much, to be fully honest, but it moved enough for us to really be able to take some really good opportunities through the entire session, right? So yeah, I think that's good enough. I don't really think I need to explain much about this, but I do kind of want to add, how do I do it? It's still like this. So phase one, what did we have? Move against the trend, mitigation of 50 minute FPG, aggression lower generates FPGs. And we'll leave it at that. Phase two, sorry, trade starts inside phase one FPG, aggression lower generates fair value gaps. Simple as that. And now we're gonna get to the trades, just the most interesting part for sure. And I can already delete all of this, although I don't want to delete the lines, just do it like this. Okay. So we call the first one trade 1, of course. This is the phase 1 fair value gap. I don't want to use the boxes, they just look awful. I could go with the 1 minute. I actually haven't, I don't think I looked at the 1 minute today. But see how, so 830 is this. 830 begins inside that fair value gap. It was aggressively lower, generated a fair value gap here and here. Stop loss should have been above the high, so even with the 1 minute would have been a fine entry as well. The entry that I took was well, the fair value was pretty much the same, although of course the 5 minute definitely had a larger stop loss, I'm guessing. Let me actually check that, because this was the entry. So if we go to the 1 minute, not that much, to be honest, because my entry would have been above this high, right? Basically, going for this high right there, which is 885. So a few ticks, a few pips, maybe 4.5 pips of stop loss, and target would have been this. Oh, actually, the target would have not been reached anyways, but it would have peaked at 5R, which could have been a point to close, right? But for sure would have taken some partials. And then we get this, which again, we see, I do think this is the 5 minute fair value gap, and this is price trading into that fair value gap. And then we see the aggression lower. So we have basically in this case, both the 5 and the 1 minute would have given us somewhat similar entries. I do think the 1 minute had a lower entry on this case, because the 5 minute high, I think, is this. And I didn't use the entire stop loss if I remember correctly. Looking at London. Yeah, so I entered here, and my stop loss is somewhere around here. I don't think I can check my stop losses in this, which is a shame. Yeah, let's just do it like this. Let's have the entire session. Phase 1 FPG. Looks odd if we do it like that. So phase 1 at fair value gap session begins inside here. Let me actually redo this little drawing. And this is probably a little bit boring for you, but it is something that we all have to do. So just wanted to show that while I explained today's price action and why I took the cells that I took. Session open. And phase 2 fair value gap. That is good enough for me. It's my entry. And stop loss is going to be up here. That's 55 with spreads. Peak at 4R. Would have gone for this low for sure. This is trade 1. And how did we take this trade? Phase 1 mitigated 50-minute FPG. Phase 1 creates another FPG in 5 minutes. Phase 2 begins inside phase 1 FPG. Phase 2 creates fair value gap. Execution on 5 minute fair value gap. Could have been on the 1 minute as well. And that's pretty much it. And now we need the exact same drawings per se. Here. So we have the run on buy type crediting. the immediate aggression lower. I've noticed that in some cases we see fair value gaps, but without really much aggression, or they take too much, or they go too high above the buy side liquidity, and they tend to fail a lot. That's the reason why I've been able to like avoid a couple of losses when the 5-minute doesn't really create that much aggression after a run on liquidity. So my stop loss 75, I think it was. I do remember that number for some reason. And we have a 1 to a 3, which is a 3%. 3%. That's fine. And that is trade number 2 with what? Run on buy side liquidity. Immediate aggression generates 5-minute FPG, and execution 5-minute FPG. Okay, so that's pretty much it. Now I'm gonna do the conclusion, but I'll do that on my own. So Thursday 7th, London kill zone. This is the price action that we have. Session screenshot. Exactly this. Pretty cool. Phase 1, move against the trend, which is this. Mitigation of a 15-minute fair value gap. A little bit of move lower, aggression lower, creates 5-minute fair value gaps. Phase 2 begins inside a fair value gap of the phase 1. Aggression lower generates fair value gaps here, and then there, but that's phase 3 already. And trade number 1, mitigation of 15-minute fair value gap, creates another fair value gap in 5-minute. Phase 2 begins inside phase 1 fair value gap, which is the trade that we already discussed. Trade 2, run and buy side credit immediate aggression generates 5-minute fair value gap, execution of 5-minute fair value gap. That's exactly lovely. And conclusion will be done on my own. So that's really all that I wanted to show. It was a very interesting day. I wasn't really that interested in actually trading today because, again, Thursdays tend to be a little bit difficult. But today it was actually all right. It wasn't that good either, but it was fine enough to give us some somewhat clean opportunities through the day, which is just lovely, of course. So that's pretty much all that I wanted to show in this video. Hope you enjoyed. Hope you took something away from it. I'll be seeing you until the next one.